It's Market Day Report. We're glad you're with us as we work our way through a Tuesday. Monday was a little rough for the row crops. Let's see what Tuesday's brought to us. The corn market is where we begin, and we're still lower here. May down a couple of pennies at 452 in the July, same story at 463 3/4. However, December just a tick lower right now at 479 3/4, and we're trading in a 6-cent trade range. How about beans? Beans went limit lower yesterday, 60 cents lower on those front months. May, however, up 4.5 at 11.59 3/4. July, 7.5 higher, 11.75, and then roll down to November. Again, we're less than 2 weeks away from USDA's acreage numbers. 11.39 3/4 on that November. It's 19 higher. How about the wheat market? Wheat got shook yesterday, and well, shaking continues. We're in an 18-cent trade range on new crop Chicago, and we're near the bottom, down 601 3/4. How about hard red? Hard red's down 8 3/4 at 621 3/4. And the cotton market, December, 72.86. It's up 88. We're trading 72-cent cotton. Chris Swift's with us. Chris is with Swift Trading, and what a rough start to the week for row crops.
Unbelievable. And let's go back 4 weeks ago when I sat here and said, we might need to be marketing some of this corn and beans at $1 lower than where we are right now, and 50, 60 cents lower in in corn right now. So it's amazing how quickly things turn, and it's because we're in a commodity market. And commodity markets are unlike any other investment. It is purely a market for price discovery. And now that we know that we have an energy impact on everything under the sun that we do, it also bleeds into all the other commodity markets. So that change alone is what brought that we don't have any more or less soybeans out there than what we did prior to this. No difference in the cattle market, the hog market, or any other commodity out there. There's really no impact in supply from this event. It's just what is going to be the demand side and how that energy price impacts that consumer going forward.
So I'm thinking through things here, and I'll say this from time to time. The value of anything is what somebody is willing to pay for it.
It's the sum of all participants.
So we might argue from time to time we're not getting enough for our commodity, whatever that is, our crop. But at other times, we may be getting more than what the fair value would have been otherwise, right?
Absolutely, and these opportunities like this present that to us. And we kind of towards the end of last week, we saw an opportunity in the November beans. Here they are really close to 11.78, 11.80, something like that. And you could have floored those beans at $11 with an 11.50 put. So those opportunities still exist, and they're going to, because now that this fluctuation is here and the volatility, I think it's more likely to continue than it is to contract. And I listened to the president yesterday, and there's no end in sight right now. We'd like to think that there is, but we're in a full military escalation, and that's going to continue to be a hard pull on that diesel fuel.
All right, we talk about volatility. The weekend, Friday and Monday, were the first time in 3 weeks we didn't see extreme volatility in the cattle market.
Right.
So how about we take a break? We'll come back and talk livestock with Chris Swift. This is Market Day Report. This market was mixed in trade yesterday. We're talking hogs. Lean hog trade is still kind of mixed. April up 25 at 93.75. Roll down to July, though, at 108.87. It's down 45. We've seen good strength in that June, July, and August contract. And again, for good reason. That's prime grilling season, is it not? Yeah, 106.75 on the June, up to 108.87 right now on the July. And how about feeders? Feeders higher across the board. Most of the gains $1.72 or $1.77. August is up over $2, but that front month March trades at $357.17. And then to live cattle, and we're higher here. 82 cents higher front month April at 234.07. Chris Swift's with Swift Trading in studio with us. And Chris, no doubt packers are moving back. If they're not already, they're moving into profitability for the first time in a while. Mm-hmm. If we look at the entire beef market, that industry is a pie. Cow-calf producers, stockers, backgrounders, packers, the whole works. If they're starting to get a bigger slice of pie, who's getting a smaller slice?
Well, the producer right now is specifically the cattle feeder. And we saw an enormous change where they have been in the several hundreds of dollars profit for months on end. 2 weeks ago, they started under, and last week they were a little bit about $300 a head loss on that. But that's just now starting. And the swap has been that we're not getting any higher fat cattle prices. When placed in October and November, we had the highest prices there ever was in the feeder cattle market. Fast forward to today, we still have those same prices. Going forward, we're going to be doing battle with consistently having to pay spot month price, the highest today, and we're going to look out into the future at discounts. Sometimes those discounts may come back up to where the current market is now. Sometimes the current market may fall to those discounts. But throughout the year, we're probably not going to see any fewer animals. We may not get any more, but we're probably not going to see any fewer. And we know that feed costs, diesel fuel, and now the drought is really going to impact and have to shift and move cattle around again in some manners. And it's just not going to be straight up nor straight down, but could really just kind of triangulate in an enormous wallowing price range. That's what I kind of used yesterday, is we may have to sit up here and just wallow for a while.
You know, we look at row crop producers, they've been in the red for quite a while, and some will say, well, why do you keep doing this? When you look at feeders, because feeders are feast and famine, when they are going through times of deep red, how can they continue to go? Do they make up for it once it gets into the profit areas?
Well, better, we hope that we put some a little bit to the side. While we were making those big profits, we put some off to the side. But as in any business, it has to grow. Once you stop growing, you're pretty much going out of business. So a lot of that money is reinvested again back into either more cattle, more production facility capabilities. And then we have to kind of weed through those lower times where the profits aren't as good on there, or maybe even take a few losses. But cyclically, everything is cyclically in commodity production, so therefore it does. Sometimes the losses aren't quite as bad. Sometimes they're a little bit more. Sometimes the profit are quite a bit. And that's the only reason that people are really in commodity production, is they want that opportunity to make more than just the average salary.
There you go. That's why he is so valuable in here. Chris Swift is with Swift Trading.
And at least when it comes to cattle, we know that we have quality beef.
Oh, absolutely.
A lot of our family's going to be enjoying some corned beef tonight. I believe that's brisket. I'm not a huge cook, but there you go. Well.